alone. All right, let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures are very important. I'm going to go to specific trade ideas. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor CC. I'm showing you what I do in my own account based on my own risk tolerance level for general education informational purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or equal past performance. Trading psychology is important, right? It's very important to have a trading plan, become a disciplined trader. How do you do that? Documentation, right? I encourage everybody to keep your rules in the trading plan. We have several trading plans uploaded on the website, Tradespoon website, and a Yellow Tunnel. And then you keep a journal, right? Every time you trade, you basically document why you got into a trade, what was the reason, and go through the checklist, right? Are you breaking any of the rules? So the idea of the process, the economy of control, is that the process is more important than the outcome. I mean, outcome is very important, but not at the expense of the process, right? What does process mean to me? One is propose to have 30% of your portfolio in cash, right? That could be one checklist. Make sure that you do have cash. Market pulled back 10%. Spiders were down 10% last week. It recovered probably half of its losses, close to half of its losses. So the question on everybody's mind is this the bottom? Is this the end? Are we going to have a V-shaped recovery and just continue going higher, or will there be at least a retest of the lows? Right. Last year we had a retest. Right. We actually made new lows in September. So we could have similar kind of setup this year. So for that reason, you need cash. So if the market does pull back, you can deploy the cash, right? Portfolio drawdown, right? You look at how many positions do you have and position maximum position loss. I propose if you're new to trading to start with 4 positions at a time, right? You start with 4 positions at a time and maximum loss of 2.5% of account value. So if your position is down 2.5%, I mean, yes, it can recover, but more often than not, it can actually continue to go lower, right? Spiders, it was down 10%. So a lot of these positions could be down more than 2.5%. So for that reason, you want to minimize your losses to no more than 10% of your account. So for positions, 2.5% of account value per position, then you know your drawdown is 10%. Right now, I think I would be market neutral. Right, you can, if you have stock, you can hedge it with the put, right? You can buy put, you can sell calls against your stock position. If you're not comfortable trading options, you can buy inverse ETF, right? You can buy inverse ETF. Bill, present as usual, welcome. Wait till end of day to make the trading decision. Do not sell naked options. Allow more time, allow more space. Right? When you trade option spreads, we have all VIX expiration this week. On Wednesday, then we have Friday's OPEX expiration. In April, in July, all of the expiration caused more volatility in the market, right? This is the time of this period of this week and next week is that any negative news, and that could spark high moves in volatility. So let's look at the positioning. We have a PPI data tomorrow, and then we have CPI data, and then we have VIX expiration on Wednesday, right? VIX was extremely volatile last week, right? We went from 60 back to 20. And then we have August expiration. So let's see if how people are positioned. So in terms of August expiration, right, up going into the Friday, in terms of CPI and PPI data, I think we're pretty well positioned for 520, right? The people are buying aggressively 520 put. So we can go in here. So August 16th, still pretty large position at 520. So more likely than not that 520 is the support. In terms of call selling, there is not a lot of call selling, right? 550 is the first one. So we could be trading. Let's look at spiders. So 50-day moving average is 543. This first gap was around 515. So we could get to 550, right? Retrace maybe 2/3 of the pullback if you go through Fibonacci retracement, right? All the way to the high, all the way to low. So we're basically retraced 50%. Market is up slightly. Next level would be 62%. So you could have 62% retracement. You could have a little bit more, 550. So all of that is possible. Just depends on PPI, CPI data. We still have geopolitical risks, right? In terms of war in Israel and Iran, the escalation in the conflict. But those risks aside, you do have PPI data tomorrow, right? August 13th. So tomorrow we have a PPI data. And then CPI data on Wednesday. We have retail sales, which has been weaker, right? So retail sales. So at this point, we are trading based on, bad news are bad for the market, right? And we're also trading that when yield is up, market is up as well, right? That means stabilization and most likely, that we're not in recession. So yield is up, market is up. If yield rolls over and starts selling off, then we're back, back in fears of recession. Obviously, that could change. That correlation could change if the inflation data comes in much hotter than expected. It could be the same thing where rates go up and Fed cannot lower interest rate. But for now, everybody expects Fed to cut interest rates in September. Some people think it's 25 basis points. Some people think it's 50 basis points. But the consensus, the chatter is that Fed is behind the ball in terms of cutting interest rates, and we are heading into hard landing. Right? Similar discussion we had in the past year. So we'll see. So I would watch 10-year yield, 2-year yield. Right, two-year yield has been below 30-year yield for quite some time. It's getting closer to 10-year yield. So you have a stabilization of the yield curve. Obviously, Japanese yen is very important. Right? They did pull back and kind of stabilize. and then Japanese stock market, right? We have a sharp pullback, biggest sell-off since 1987, and we are trading below 200-day moving average. So in terms of looking at the target, looking at your support and resistance levels, let's look at the stock forecast toolbox. So we said 520, right? That's for Friday expiration. Looks like we're pretty well positioned into 520. And that's what the model sees. It still sees a negative trend, right? From short-term perspective, there has been enough damage to see that for now, bears are in control, right? As long as we're below 50-day moving average, as long as we're not making new highs, bears are pushing the market down. So we're in negative trend. 532 market is overbought, right? 533 doesn't see a lot of momentum outside of 533. I think QQQ actually turned positive, so QQQ can push market higher. It's still negative. So QQQ, I mean, 456, 457, but close to overbought levels, right? So Spider is 520. It sees 520 as your support, and then overhead resistance is 540, 550, 544. Your 520 support, right? Last week low, not last week low, but Tuesday's low. That's your support number one. Pretty well positioned. I would allow for day trading. Now that the VIX was elevated, VIX is still at 20 or above, I would use 2% stop loss, right? So about 15 points now. I would use 15 points for day trading. Longer term trading, I would, 510, right? 510 would be 25 points for longer term trading, and that would match the 200, close to 200-day moving average. And then for day trading, you need to have $25,000, so that would be 15 shares you can do for day trading. And then if you're holding position overnight, the average account is 10,000. So I'm doing calculation. If your account is 10,000, then I would say 10 shares, no more than 25 points, so $250. Right? That would be no more than 2.5%. So those are the main support. We do have retail data. We have PPI, CPI. Wednesday, we also have VIX expiration, and then Friday we have monthly expirations. Beyond August 16, if you look in September, let's see if the positioning has changed. But in terms of September, next level of support, any meaningful support is 520. So there's some 520, 25,000, and then 510. So we still have some support, and it's growing, right? So people are rolling their position from August, slowly rolling them to September. So 510, 520 has some positioning, right? There's some, but not a lot, but there's increasing position. Obviously, the higher the 40,000 then is, if the last week low doesn't hold, then the next level would be 500, which is also well positioned. Any questions in terms of positioning? To 10 inverted, carry trade, carry short-term stabilization, wait 10 minutes. Good morning, Vlad. Fred, welcome. I was concerned you guys couldn't make it. We had some issues with GoToWebinar, but now I think majority of the people are actually back. That's good. Probably lost a few people, but hopefully they'll realize that there's a new link and they can join. Anyone have difficulties joining the webinar? All right. So in terms of trading, I think just got filled on. You can find this trade under Elite Circle. So 470, 465. Last week, the QQQ put spread didn't get filled because we had very low, quick 5% drop on Monday. So I rolled a little strikes down, 470, 465 put spread. Got filled at $3.10, $1.90. Maximum gain $1.90, maximum loss is $3.10. With the idea that QQQ by BT now in September will not stay above 50-day moving average, right? I mean, it could get to 50-day moving average, but there's enough damage done that core scenario it might, I mean, we'll see on CPI. It has to clear this level, but assuming it does, something like this. All right, so that's kind of my core scenario that I'm thinking about. Very similar setup to last year, right? Last year, August, we rallied towards the end of the August. We have Jackson Hole meeting, right? Jackson Hole decision, end of August. Fed has to change the expectation that Fed cannot say the same thing they said, during the last FOMC meeting, right? Because if he doesn't change the rhetoric, then market sells off, right? Because the expectation is that they're behind the bull curve and they need to start cutting rates. Some people think it should be done aggressively, 50 basis points. Some people think at least 25 basis points, but nonetheless, the rhetoric has to change, right? And last time it didn't change, and we did have at least initially down. Right, I have Spiders put spread. I have now QQQ spread. I have IWM Russell 2000. Probably too many. If you only have 4 positions, right? I have 3 bearish positions and 2 bullish. So that would be maybe don't either do Spiders or QQQ. Just depends on your portfolio, right? On Yellow Tunnel. Same trade you can find in Dynamic Power Trader. Right, so if you already have Spiders put spread, maybe you don't need another hedge. Just something to consider. But you can find the same put spread 470, 465 on. I got filled 2 times. Okay. So you can find it on here, and you can find it on Elite Circle. Fred, seasonal chart from seasonality. Yeah, seasonality also not the best time to be bullish, right? Usually, I mean, there's two observations. During elections year, usually actually August, September could be bullish, right? It could be bullish, but outside of election year, usually August, right? This is where you have start having pullbacks, right? Rebounds and pullbacks, right? Deeper, So from seasonality point of view, usually there's another leg down in September. During September, when everybody comes back from vacation and liquidity increases, and you have August expiration, you have another leg down, right? And you take at least either revisit the lows or take out the lows, right? So from seasonality point of view, it's a similar kind of price action. And we're tracking 54%, not huge, but 54% correlation between the current year, right? The current year price action and average of previous years. So that's seasonality. Any questions on QQQ trades, Spider? In Profit Accelerator or an aggressive power trader, there was eBay. So LA Lilly, right? LA Lilly had a good earnings. So it did close half of the position on Thursday, I believe. Right? LA Lilly had a strong rebound after the earnings. So LA Lilly, I'm still long LA Lilly, and I'm long silver. I mean, LA Lilly strong rebound on earnings. Silver still a weak rebound. It gave up half of the gains this year from this year. But it looks like it's building the bottom, right? I would say probably we're close to the bottom. It might be another leg down, but close to the bottom. So that's silver, up another 2% today. so we have aggressive power trader, eBay. So eBay after the earnings, pretty strong price action, right? It continues to make highs despite the market correction. So they're doing something right. So eBay sounds like another opportunity to go long, right? If you're bullish. So I like eBay. There's not that many chart patterns that did not participate in the current sell-off. Doesn't mean that, it will not, but at least it looks, still strong momentum, upward slope in 50-day moving average. It's at all-time high. So maybe I would use 50-day moving average as your calculation for, my thought process, if it's down 5%, right, market could be volatile. We could have a strong sell-off, especially now it's kind of a little bit overbought, right, unable to break through this. So if it drops to 54, I don't want to be down more than $100, right? So 40 shares. 40 shares, if it's down $2.50, then you're down $100 on $10,000 account. So I'm going to put down eBay. Okay, QQQ, I think I'm overly exposed, so let's see, 325, let me close half of the position, 320, 330. 340. I meant to do one contract, I did two, so let's see if it hits 340. It's the 330. Maybe the second half of the $4. Okay. So half of the shares, I would just look for maybe 10% profit. The second half, 30% profit on QQQ spread, bearish spread. On eBay, I bought at 56.65. Maybe look for 1% gain on half of the shares. So that'll be 50 cents. So 57.20. What's the high? $57.16. Okay, so $57.20 on half of the shares. And the other half, $2 so $57.70. So 60. So that would be eBay. All right, any questions? Let's see, where am I connected? eBay is trending up, Etsy trending down. So let's see. So eBay is trending up. Let's see, Etsy. In different marketplace, but yeah, definitely diverging, big divergence. So let's see. Let me try to close that spread. Very. Or how's the spiders? Spiders is $5, $6. You know, maybe I just close the spider spread for now and leave the QQQ. So we have 4, let's do 350. 50. So yeah, definitely divergence between Etsy and eBay. Let's see. What else? Let's see how the rest of the sectors is doing. So materials are sitting at the key support, right? Kind of a May-April lows. So materials are sitting at the key support. Home builders, strong rebound, but still in uptrend, right? Very sensitive to interest rates sector, but looks like a strong upward momentum in home builders. Still, metals and miners pierced through that April lows and trading, trying to get above this breakdown level. China continues to deteriorate, right? Kind of give up maybe half of the gains. Pretty weak rebound. Industrials rebounded. Looks like rolling back. Right. Full test of April lows and bounce back on industrials, slightly down today, 0.5%. Euro, strong rebound euro and weakness in dollar. Dollar continues to be weak. Was this unwinding of carry trade, Japanese yen and dollar. Pushing dollar lower. We are kind of on this important support line. Right? So in 3 weeks, we basically same level as 2 Fridays ago. Not last Friday, but the Friday before. Junk bonds pulled back, but strong rebound, right? Recovered. So junk bonds are stable, right? That's the positive news in the market. I mean, even though initially we had widening of the spread, but now it looks like we're back to trend. So that's positive for the market, that there is no liquidity issues for now. Strong price action in the REITs, right, and lower interest rates. REITs are in upward sloping momentum. Healthcare is close to multi-year highs, if not all-time highs. So people are looking for safety in healthcare stocks, consumer staples stocks, similar price action, consumer staples. Looks like Dow Jones and value stocks are rolling over today, down 0.5%. Spider slightly negative. Let's see, banks down 0.5%, but strong recovery, right? Big green candlestick yesterday. Arc Innovation pulling back. Regional banks are still positive. Airlines, pretty weak. When people travel less, airlines down. We talked about bookings.com, hotels. They're all kind of the trend is that consumer is spending less. We'll see what the retail data looks like on Thursday or Wednesday. Retail Thursday. Retail data on Thursday. So we'll see what the retail data looks like on Thursday. But for now, it's weaker. Let's see, small caps are weaker. Energy looks like it's rebounding from last week's sell-off. Small caps, similar price action, right? It's kind of, we're at the same level as after the FOMC meeting, right? That after the initial pullback after the FOMC and the unemployment data, right? So we're kind of back to kind of recovered all of the losses due to carry trade, but staying at the same level as the FOMC meeting / unemployment data. Silver, similar price action. Gold miners are actually posting pretty strong recovery, and VO is going the opposite way. Our actual VO also bounced back last week on the LA Lilly earnings, so that's good. Google slightly lower, Amazon slightly lower, Nvidia, right? Elephant in the room. Yeah, it's kind of same thing. It's kind of moves the market. So it's trading at the same level as not last Friday, but Friday after the unemployment data. Apple slightly higher, JP Morgan down, Tesla slightly lower. Starbucks, somebody's buying Starbucks, okay. And how's the Nikkei doing? So this is pretty steep pullback, and Nikkei is recovering, right? A lot of people, technicians are saying, keep an eye on Nikkei, right? Because that's another unknown and risk, right? I mean, it could be like 1987, where it's a V-shaped recovery after, largest pullback since 1987. Or it could be, kind of the sideways consolidation for quite some time. For now, it's not going anywhere in the past 4 days. So that's Nikkei. Strong recovery in Pelletier. Pelletier continued to grind high, actually making new highs. So some AI stocks are able to, deliver strong earnings and continue to outperform. SMCI is weak. We're at 82. I'm a day late on my iron condor. Okay. That's about it. 8:55. Any questions? All right, we have almost everybody came back. So that's good. Discord guys, welcome. Cherry Blossom, thank you for participating. All right, any questions? Silver is going up a little bit. Yeah, Pelletier. I mean, Pelletier looks strong, right? If you want to be long and you're a momentum trader, then Pelletier, because imagine if market starts recovering, right? Because the consensus is that we're still in strong uptrend, right? If you look at the stock forecast toolbox, not 10-day prediction, right? This is 10-day prediction, but if you look at the 6 months, we're still in a strong uptrend. Well, maybe not QQQ. QQQ looks like it's getting weaker, but spiders still strong uptrend, right? And a lot of the investment banks still calling for 560, 580 end of the year, right? That we're going to close somewhere between 560 and 580. Model agrees with that. So long term, we're still in uptrends. From seasonality point of view, you might want to be a little bit more cautious, August, September, but probably going into elections and after elections, and especially if Fed does cut, now they expect 100 basis point cuts. There's some people think we're going to have 100 basis point cuts between now and the end of the year, right? We're in 5.25 Fed rate and 2-year yield, kind of a good proxy for what I think that we might get, 100 basis point cuts between now and end of the year. I think that would be very aggressive, but possible. Right? So all of that could create strong momentum, and stocks like Pelletier, especially after strong earnings, would probably continue going high. SEDG. Haven't traded SEDG, but let's look. Usually I look for stocks that have weekly options, like liquid. Solar Edge Technology, I mean, it looks weak, right? It's a pattern of lower highs and lower lows. It's a descending 200-day moving average, descending 50-day moving average. If you trade based on fundamental analysis and you think this is overdone, maybe. But otherwise, especially with the election, right? Solar Edge, I assume it's some kind of a solar power. Elections also, right? Probability of red wave, probability of blue wave will influence some of these energy sensitive stocks, right? Solar energy, green energy. So personally, it looks like a very weak price pattern. Gold and silver divergent. Gold is a winner. Yeah, gold is doing better than silver, right? Gold is a kind of a classical hedge for inflation and for risk taking, right? And it's close to all-time high because there's still risks in the market, right? VIX is still, I think it's above 20 last time I checked, or close to 20. Let's see, where's the VIX? 20, right? So VIX is still at 20, right? Almost 21. We did have a sharp pullback. The question is there another leg up, right? Usually there's back in April of 24, we had spike to 20, then we had another spike to 21, kind of February of 24, usually there's 2 spikes. So we'll see, right? This is October, a lot more, but you do have, usually kind of have these spikes that comes into waves. Right, this is August, right? This is August, July last year, right? We had initial spike, it actually dropped back to 13, right? Till end of July, then spike, bigger spike in beginning of August, right? Pull back again, and then another spike in towards the, apex, right? Options expiration, you had another big spike to Wednesday, then it dropped significantly into September, right? Drop again, and then you have another wave up. So you might have these waves of volatility between now and elections. Activists in Starbucks, thank you. I haven't seen Angelique. I think she's taking a break from trading. Thank you, John. Are there any market moving earnings, Bob? Let's look. Yeah, so let's look at the earnings. They're announcing earnings. Nothing interesting today after the close, but tomorrow I think we have, which maybe we can do, is analyze what's tomorrow morning. Okay, so we have Home Depot tomorrow before market open. So probably just Home Depot tomorrow. On is a volatile stock, Home Depot. Let's look. Yeah, so we have SE tomorrow, right? These are all Chinese stocks. So this week is going to be, FXI is probably going to move. So if you're in FXI or some of the Chinese stocks, they will move, right? SE, a strong rebound going into the earnings in SE, TME. Then some music, similar price action. So Home Depot, I like Home Depot, right? We had a pretty sharp pullback from the highs. Was it 10-15%? Yeah, so close to 15% drop from the highs in Home Depot. So it has strong earnings, right? Because people are shopping and do-it-yourself kind of setup. Then we could bounce to 370, 380. If it's bad earnings, like because the retail sales less on traveling, less on airlines, then maybe another drop. Let's look at the positioning in Home Depot. I do have IWM, yes. So I do have question. It was Carol IWM. So if you look at the lead circle, IWM, sorry, positions, IWM. I'm still bearish IWM. So I do have 215, 210 call spread, bearish call spread. So I'm short at 210, 215 strikes. So the idea that IWM not gonna jump above 215. And it looks like it didn't go anywhere for 5 days and started to roll over a little bit. We'll see where it's going to end up. Yeah, and I was able to get out of the. So QQQ was I forgot to cancel my second order because of the hours. But I have the second order at $4. Right? So I have spiders, put spread, QQQ, IWM. If market does pull back more, right, then the idea is to long is a little bit overextended, right? It's a little bit overextended. That doesn't mean that on PPI data tomorrow we're not going to hit 213, but it is overly extended. And for now, it has a hard time reaching 50-day moving average. And it's the same setup. QQQ is below 50-day moving average. QQQ is significantly below 50-day moving average. Spiders is also below 50-day moving average. Right? We spend 2 weeks below 50-day moving average. That's not a good price pattern usually. All right, Newman Mining. Yeah, looks like at least today's silver gold miners are doing better. Agree. All right, so Home Depot, let's look at bar chart, estimated move. In Home Depot, probably what's it, 6 to 8%, if I have to guess. Right, higher. The VIX is higher, so 7 to 8%. So 7 to 8%. Look at 920. 8% would be roughly what? 30 points. So 30 point, roughly 30 points. So 344 plus 30 is 375, 380. So 380. So you do have a lot of positioning at 380. Dealers are long gamma, but you know it could go to 380, or it could go 30 points lower, probably 310, right? 315. There's a lot of positioning at 315. So 315 and 380 is how people are positioned. It's $300 stock, so maybe for $10,000 account, maybe it'll be too expensive, right? We have to wait for something cheaper. But it wasn't that volatile last couple earnings. Here it did move 7%, right? So it can move 7 to 8%. I mean, up or down, 5%. 23 was more volatile. So that would be earnings for tomorrow, Home Depot. And $10,000 account, I mean, I'm inclined to do butterfly, be long volatility, right? Because VIX is actually back to 20. It could, I mean, it could rally after the PPI and CPI data. If it's worse than expected, we could have a move to the upside. Opposite the market direction. I think TLT is inversely correlated to the market right now, right? Because the idea right now that people are less concerned with inflation, they're more concerned with hard landing, right? Recession, hard landing. So when TLT drops, market rallies. When TLT rallies, market will drop. So I think if the market is going to pull back, TLT is going to rally. Japanese yen is probably the same thing, right? Japanese yen pulled back, right? Market rallied. Japanese yen rallied, market pulled back. So I think that correlation is also going to stay. Right, they're kind of inversely correlated right now because one is the carry trade and one is the recessionary trade. All right, we talked about earnings. We talked about tomorrow expect more volatility in the market, right? I mean, we could rally, have a significant rally if the PPI data can drop not significantly, but like within the expectations. Right, it was 0, 0.2, 0. If it's 0, 0.1, I think that would be positive for the market, right? Continue to trend lower. If it drops significantly lower, there could be a fear of recession. If it rallies significantly, it could be a fear of inflation. So it has to be more or less stable, right? Kind of like we had initial jobless claims, right? As long as it comes in lower, you don't have a big surprise to the upside, then market rallies. So now I think market is going to react more for either geopolitical risks or macroeconomic conditions. It's probably not going to react to earnings that much. All right, it's 9:12. Let's see, anything else? So let's look at short term. Let's see what's going on. So QQQ is fluctuating between gains and losses. Right, it's kind of trying to break above this level, right around 455, 460. Close the gap, right? The next level, it closed the second gap. It needs to close this gap after the unemployment data. Value stocks are slightly negative. Small caps are slightly negative. Titles are flat. So everybody's waiting for tomorrow, the unemployment data. All right, thank you very much and have a great day. Yeah, Bob, no, I'm going to do the closing bell today. Keith will be there tomorrow, closing bell. So Keith will do Tuesday, Thursday, and Friday. Keith will do Tuesday, Thursday, and Friday. I will do Monday, closing bell today. Oil is, how's crude oil? We haven't looked at crude oil or Bitcoin. So it looks like Bitcoin pullback, right? Bitcoin is down 4%, right? That's usually the proxy for risk taking. So I would look at the Bitcoin. Nvidia is actually, closed the second gap and on its way to close the first gap. So Nvidia is doing better, and crude oil is also, strong rebound from August lows, 72 to 78. And geopolitical, right? Escalation of geopolitical risks. In Middle East, crude oil is heading higher. All right, thank you very much and have a great day. I will see you guys at the closing bell. Thank you.